on the crypto market. So JPMorgan, and Jamie Dimon runs JPMorgan, a very staunch crypto critic, right? Pet rock, Ponzi, pretty much says the same things that I do about Bitcoin and crypto. But JPMorgan, apparently, they haven't announced all the details, but they are going to allow their institutional clients to borrow against crypto collateral, Bitcoin and Ether. And of course, the industry, this is great, right? We can use our Bitcoin to go out and borrow money and buy more Bitcoin, right? Or buy more Ether or whatever. Or we can, take money out and just spend it and not have to sell our Bitcoin and pay taxes or whatever. So, the markets look at this, this is good news, right? Because you can now lever up on your Bitcoin. But ultimately, this is going to be bad news because, I don't think Bitcoin or crypto is very good collateral. And I'm sure that when JPMorgan extends credit on Bitcoin and crypto, that they're going to be recourse loans, meaning if you end up getting liquidated because Bitcoin or Ether crash and JPMorgan is not able to get enough money, they're going to come after your other assets. But the problem is maybe their other assets won't be there. I think there's ultimately going to be a lot of losses because leverage, and we saw how that happened just, like a couple of weeks ago in crypto. But if a lot of people lever up their Bitcoin and then there's a big drop in Bitcoin, which will happen, now margin calls get triggered. And that exacerbates the selling because now you're selling into a weak market that doesn't have a lot of liquidity. So the more leverage that gets introduced into the crypto market, the more downside risk there is in that market. Sure, in the short run, it can help push the market up because you can lever up and buy more crypto, or people who might otherwise be selling their crypto can borrow against it instead and not sell it. So that helps keep the market up. But all of that leverage building up in crypto is ultimately a big negative for crypto and, of course, for the lenders if they end up losing money on their crypto loans because the market crashes, they sell the crypto, and they don't raise enough money. Now, I'm sure they're not going to allow a massive amount of collateral, right? I'm sure they're going to maybe loan out 25% or 30%, right? They're probably not going to give you as much credit against Bitcoin as they would against, a typical stock, right? Because they would recognize greater chance that there could be a big drop and there might not be the liquidity. But they haven't announced the details yet. Oh, by the way, so I did a